In this video, I will share with you the top indicators I use in NinjaTrader to trade NQ futures. Works for ES as well. Every day we have people coming in on our live stream, and for the past few weeks, almost every day we've been seeing people locking in payouts like this, one after another, hundreds and thousands of dollars, locking in those payouts from multiple different prop firms, including myself. I do have to warn you, one of the most important indicator I use is often overlooked by so many traders because it's not flashy and it doesn't get a lot of hype from the gurus and traders, but it works wonders day in and day out if you know how to use this indicator and incorporate it in your trading. And that first indicator is average true range, short form as ATR. If you've been trading with us on our live stream with the whole community, you would have heard me say this all the time. ATR is currently this and ATR is currently that. First of all, let's talk about how to add this indicator on your chart. Right click on a chart, click indicators, and then you will search ATR, and there it is. You click add, everything will be default, and you click apply, and it'll be added onto your chart. Now that it's added onto your chart, how do you use it? I can tell you one of the most important reasons why people blow up their accounts is because they do not understand ATR. So pay close attention. Average true range explains the volatility that the current price action is having compared to normal volatility. For example, right now I'm recording after hours when Amazon and Apple has just reported earnings. If you can see, the ATR suddenly jumped to 30, which is very high on a 1 minute chart on NQ. Typically speaking, at New York Open, NQ with good ATR will range between 15 to 20. These are numbers you have to know. When NQ is consolidating and is not breaking out, you will see NQ be sub 15 ATR. Somewhere between 10 to 15, NQ will be moving about 10 to 15 points per 1 minute candle. What does that mean? If you scroll back to earlier today at 9:30 open, the ATR was at about 16. It got about to 20 and then it slowly started to go down into lunchtime. This is what happens during lunchtime. Volatility dies down. That's why we trade the first couple of hours when the ATR is still high. Anything above 15 to 20 is a typical ATR for NQ. So if we go and check out this morning's 1 minute candles, we pull back down this ATR. Right at the pre-market, we got to sell. And if you can see these candles, at 15 to 20 ATRs, NQ is moving about 10 to 20 points range. Of course, some are going to be bigger, some are going to be smaller. But on days when NQ is having an ATR lower than 15 or 10, then you're going to see smaller candles like these. Now, why is that important to know? The reason is because when the ATR is lower, you do not use the same size as you normally would if the ATR is much higher. Many people ask me, FSP, what is your position sizing for a 50K account? That's the wrong question to ask. Why? Because not all trades are created equal. I personally don't play poker, but I know poker players will not bet the same amount of their chips when their hand is not very good. But when their hand is very good and they think there's a high likelihood of winning, they take the risk. Some of them go all in. Those are very high stakes because they know the odds are in their favor. Same thing it is with trading. I know some gurus will tell you, oh, it's always 2 contracts, always 20-point stop loss. But the reality is, if you've traded long enough, you will know that a 20-point stop loss is not going to do anything when the volatility is increased. Because you could be right on the direction, shorting the pops. If you constantly set a 20-point stop loss, you short it on this sweep here. With this price action, you get stopped out on your 20 points and instantly it starts going down 120 points in your favor. You're going to get very upset. When was the last time that happened? You got stopped out, top take on the short, or bottom take on the stop out on the long, and instantly it goes your direction. That's because when you don't understand ATR, that will happen very often. And so on the next trading day, I suggest you pull up this ATR and learn to trade NQ in relation to the ATR of the time. If you look from 11 o'clock when it enters lunchtime, the ATR started to go down. And what happened on the price action as ATR went down? You got it. The candles became smaller, not as big as in the morning. Back in the April lows, the ATR was 35 to 60 because it was the trade war. Trump says, I'm gonna put a tariff on everybody, 100% here, 50% here, everybody gets a tariff, and we're gonna take in billions and billions of dollars. It's so great, it's gonna be so good. And when he did that, the market tanked. And when the market tanked, you would have known that the ATR was at 40 and 60s. As you see here on April 10th, the ATR was 57 and momentarily above 60. And this doesn't look like a lot because I'm currently zoomed in on 50-point increments. But if we zoom into normal 10-point increments, you would have realized that the candles are so large. When ATR is at 60 and above, in one candle, we went from 540 all the way to 700. Now that is volatility. One candle, 130 points. Do you understand why now you have to understand ATR? Now I gotta tell you one thing, everyone has been accustomed to buying the dip because if you look at the April's lows, all we had is a buy the dip market. But at some point, after seasonality in July is over, and when we come into August, September, and October, if we get a 10% pullback in the market, 5 to 10%, I'm not saying it has to, but if we get a 5 to 10% pullback, you have to start looking at ATR. What is the average true range? Because that is going to increase. And when it increases and you don't realize that it's increasing, then somebody's gonna get hurt real bad. Generally speaking, if NQ is within 15 to 20 ATR, you can expect the candles to be within 10 to 30 point range. Why is it important? Because if you're scalpers like us, we buy dips, sell rips, we only need 10, 15, 20 points. If you buy the dip, you sell the rip, you short the pop, you cover the drops, and you pay attention to the ATR, you'll be able to scalp much better if you look at the relation of ATR and the movement on NQ. And if you combine the second indicator that I'm about to share with you and you get confluence of these two indicators together, you probably will do even better. You might have heard of this indicator before, but most people use it wrong. And this indicator is the RSI, Relative Strength Index. And again, most people use this wrong. Before we talk about why, let's add this to our chart. Right click on Ninja, click on Indicators, search RSI, and click Add. Everything's default, I don't change anything, and I click apply. Press OK. Now you have RSI and ATR on your screen. I typically only use RSI on the 5-minute chart. I find that gives me a better use of the RSI, although there's been a while where I use RSI on the 1 minute. If I switch this to a 5-minute chart, this is how it looks. The idea of RSI, or Relative Strength Index, is to find possible reversal zones. Now, most people use this wrong is because they see, oh, it's oversold, so I'm gonna go buy. But it doesn't work every time because I literally back tested it for a period of 4 to 6 months to only buy when the RSI is below 30 to 20, and over the long haul, you will lose and be net red. So then how do you use RSI properly? You have to pair it with ATR, RSI, and the trading strategies that we talked about on Livestream day in and day out. When NQ looks like it wants to keep going lower, but the RSI is already very oversold on the 5-minute and is setting up to be like an inversion long. And at the same time, you see that the ATR is at about 15 or 20, and in that one candle, it sold off 30 points. When you see all three of these confluences come together, you say, okay, I will take risk in this trade to go for a reversal because not only is it oversold, at the moment when it's coming down this candle before the hammer, you understand that the ATR is in line and you can get a pop. You take the 15, 20, 30 points even, lock it in, and call it good. You don't always have to have the full move. So if you have been struggling with your entries and exits, try adding ATR and RSI in your trading arsenal. Remember, indicators are only there to help you make an informed decision on your trading that you take manually. You're never gonna find a bot that strictly goes on indicator that you can buy for a few $100 to be constantly profitable. Because if there's such an indicator, such a bot, no one will sell it. If you want more detailed explanations of how I use my indicators on Ninja inside my course 2.0 revamp, which is coming out at the end of August, I have a module that has 11 lessons just on indicators. Today, we only have time to talk about 2. If you want to get that, go to fspfutures.com. Every day, we have people coming in on our live stream, and for the past few weeks, almost every day, we've been seeing people locking in payouts like this, one after another, hundreds and thousands of dollars, locking in those payouts from multiple different prop firms, including myself. It's an amazing community to trade together, bank together, and pray together. So join us on a free live stream every day at 9:30. Hit the like and subscribe to the channel. I'll see you on live.